All right, who we got in here? What up, everybody? What up? What up? You guys are
What's
muted.
up?
What up? What up? You guys are muted just because if anybody comes in and we get in the middle of our session. All right, so let me make sure I got all my tabs up. And for those, what time is it? 8 o'clock. We're gonna start because I don't know who's jumping in at what time, but they can all catch up. So real quick to kick this joint off, I got a couple things for you guys. So hopefully everybody has a pen and a pad. I'm going to tell you about some interesting stuff that I came across this week and really last week. I mean, so for those of us, we haven't did a conference call. This is be the first Zoom in 2 weeks. So just to recap on the last Zoom, we had a pretty interesting session. It ran a little bit over, but what we kind of talked about were some opportunities in the marketplace, and we just shouted out a bunch of stocks and stuff like that. But I think I remember leaving off the cost, saying how important it was for everybody to dip their toe in Bitcoin, and this was right around Bitcoin was about 31,000, had dipped down to 29,000 that morning, and I think it was had floated up to like 36,000. And so I was just telling everybody to make sure you paid attention to that because we had those guys at the Capitol. I want to say it was right after the Capitol, something with the Trump impeachment and all that kind of stuff was going on. So I just wanted to make sure that we knew what to focus on because whenever there's instability in the United States market, for some reason, people like to historically they'll go to safe havens, right? So safe havens, for those that don't know, have always really been historically like gold for some reason, like precious metal. So whenever there would be instability, people would pull their money from the markets and then they would park back into gold. I mean, you've even seen people do it real estate. The problem with real estate right now is this low inventories, especially on the residential side. And with gold, gold has competition now, right? So if everybody should know this by now, Bitcoin has become a formidable little brother to gold. So gold has about $11 trillion market cap. So out of all the gold that's been dug up out of the earth, it's about $11 trillion worth of it circulating in our economy. The problem with gold is if I want to use that gold, I have to take it out of my safe, shave a little off, put it on the gram scale, put it in an envelope, send it to somebody. They gotta put it in an envelope, put it on a scale, weigh it, confirm it. It's just too much. It's really for the modern age. It's a dinosaur, right? So gold is a dying beast, right? So all the rappers that got their chains, it'll still be worth a little bit, but the real gold is in Bitcoin. And so today, and really we've been teeter tottering on this milestone. And so if you guys are watching my screen, which I do think you got that pulled up, I don't know what I had on the screen just now. So you'll see Bitcoin is at $49,302. So since our last call, it's pretty much gained $20,000 in equity. And so in the last 7 days, it's up 6%. In the last 24 hours, 3.6%. Now, what this is showing me is that Bitcoin is actually becoming more stable. There have been times, if you go back in the history of Bitcoin, where this thing ran up and it ran down pretty crazy. So I'm gonna pull up a chart just so you guys can kind of see what Bitcoin has. Let's just go back 30 days, okay? So 30 days Bitcoin price, and I'm right here. So you see where it says Sunday. Well, let's go to Tuesday the 19th. Bitcoin price was at 36,486. I'm pointing to the screen, but hopefully you guys can see that. And then it free fell from there. Again, that's that instability that I'm talking about, down to 29,000 $958. And then we just have kind of an up and down ride. So for those that kind of have gotten invested, you have seen a little bit of return. I would not, I repeat, I would not pull my money from Bitcoin for crypto space. I have made that mistake a couple years ago, and it's just not a good move. Just for temporary gain, you just lose so much. And there is going to be, I mean, right now Bitcoin is 49,000. I wouldn't be surprised if we had a pullback to the mid 30s again, 37, 38. It just wouldn't surprise me. I think we're due for a 20%, 24% correction, somewhere around there. But again, after those corrections, they oversell, but then they come back because people overbuy those bottom dips. Okay, so I mean, if you just look at the performance of Bitcoin. So this is a story that everybody hopefully knows already on the call. I'm not telling anybody about Bitcoin. I mean, this should hopefully have been a discussion in your place of business or in your personal portfolio for some time now. But what I've realized is that while Bitcoin is kind of well known, um, these other coins, which we call alts, so anything that's not a Bitcoin is called an altcoin, okay? Like alternative solution to Bitcoin, because essentially they do the same thing, right? So the beauty of Bitcoin is that if I compare blockchain, the technology this is using, to a technology used to, it's not really much different than technology that internally banks are using, or Amazon is using, or Facebook is using. The big difference is instead of having one computer or one server, it's has millions of computers or millions of servers. So if I were to take out the one big server at Facebook, and we've seen this, they have blackouts. Anybody has a Sony PlayStation, they have blackouts, right? The internet gets too packed up, they have blackouts. It does not happen in a decentralized platform that way, because instead of having one computer, you have millions of computers. So if I take out 60% of those computers, the functionality still works. Okay. So the thing is, once you put something on, you know, you should always be telling your kids this, or I'm sure parents have told their kids this, is you put something on the internet, it stays there forever, right? And that's kind of true, but it's more true with blockchain and a decentralized platforms than it is with other ones. So like with a regular system, if you put it on the internet, so you put it on Facebook, man, Facebook goes out of business and nobody buys those servers and they just crash and go down, then they're dead. They're gone forever. Okay. Um, Not saying pull up your old Black Planet page, but go pull up your old Black Planet page. You probably can't get to any of those pictures. Maybe MySpace, but that's probably not it. Okay. So when we're looking at Bitcoin, Bitcoin is the gold. It's essentially, when you buy into crypto, the first thing you look at is Bitcoin, right? So now the biggest mistake that people kind of make is when they begin to trade Bitcoin and alts, they automatically try to say this, they go right here. This is here for the I don't want to call it the dumb trader, but the dumb trader, right? You see, it says price, and it's priced in United States dollars. The reason that's kind of a weird thing to put there, it helps the regular trader understand what's going on, but this actually should be priced to Bitcoin. So you want to have your Ethereum priced in Bitcoin. You want to have your Tether priced in Bitcoin, because the dollar fluctuates against the pound, fluctuates against the Aussie. I think when Dante was on a couple weeks ago, he was talking about the cryptocurrency. Who's calling me? Okay, sorry. The cryptocurrency, and and you saw how all of the different currencies fluctuate against each other in the forex pattern. So it doesn't make any sense to price your coin against um, dollars, because if the dollar falls and your coin goes up, it looks like your coin actually made a lot of money. What you do is you price it against Bitcoin. So you say, like, let's just look at I'll take Ethereum for an example. And I'll tell you guys what Ethereum is. I'll break all this down in 1 second, but I want to show you guys a couple things real quick. So if I were to put in here, let me get my trading view out. Or actually, let's go to price real quick. Um, so these are you don't need these real quick. Let me do this one. I said I'm freezing big time. If I'm freezing, somebody get on and tell me I'm freezing, because I got a lot of internet stuff running. I might have to just cancel all this out. And let me know if I'm freezing, guys, for real, because I just got a text that I'm freezing. I'm going to show you on CoinMarketCap. It's a little bit easier for me to read this one right here. So, okay. So do you see how you have the gold? Okay. I just realized. Can you guys see my screen? Let me just double check that you can see my screen. I think I clicked off of it.
Yeah, we can see it.
All right. Can you see my Ethereum chart screen, or what do you see?
Ethereum. Yep.
Okay. So you see how you see the Ethereum chart screen. The reason you want to read this against the Bitcoin is because let's say I bought, and I'm going to even use a different coin. I'll use like Polkadot coin or something like that. Okay. Something like Polkadot. Okay. Because Ethereum is a beast as well. Right. So the reason that Polkadot is important is because I buy into crypto. Right. And then I go and I spend initially $10,000. Right. And then I park that $10,000 in Polkadot. Right. And then it grows to 15,000. Oh, I killed it. Right. But then if I go and look at the strength to Bitcoin, okay, and the strength to Bitcoin is a -5. Well, that means I lost 5% because if I had just parked into Bitcoin, I would have made more money. What you want to do when you're looking at alts, you also want to look at the strength to Bitcoin, okay? So that's going to be on a lot of these charts, a lot of these graphs. So you'll see the Bitcoin price is usually in the gold. So that's the yellow, it's the BTC price. You'll see the dollar price in green, and then you see the overall market cap. So as I scroll up, this is up here, it says market cap. As the entire market cap of crypto grows, what is the market cap of this particular coin or treasury on top of that? So that's kind of something important to walk through. Does everybody kind of get that? Because I know I kind of went over that kind of fast. And do you know how to find what this page that I'm on? So this is a site called CoinMarketCap. It's just like kind of Yahoo. There's also one called, they look identical, but sometimes they have different prices on them. This one's called CoinGecko, like the insurance company, right? So CoinMarketCap, they both go through their little stuff, right? Because people pay them to show different prices. It's kind of a weird sector as we move in here. There's no laws, right? So everything is everybody's trying to look for their slant, okay? But when you get into CoinMarketCap, and I'll just go to the front just to explain this page because I'm sure everybody has seen this. So if you played in crypto, if you haven't, I'm just showing you it. So you're going to see all of your coins from 1 to, and on this one, they're going to have, they'll tell you if you click cryptocurrency, I think it's 5,000 coins they have in here. You got derivatives, and if you click derivatives, it's just going to show you the different derivative coins. And what these are like coins that help you buy into coins onto a market. So like the Binance coin. DeFi, this is kind of the hottest thing in cryptocurrency right now. This is decentralized finance, and we'll talk about that for a second. The Polkadot, so this is the Polkadot ecosystem, which is a little bit like Ether, and I'll talk about Ether in a second, and how the Polkadot has its own set of protocols and apps and programs and software that's built on it because it can do different things than the ERC20, which is the Ethereum. Then you got NFTs and collectibles. These are like digital collectibles. This is what the billionaires are going crazy for. I still kind of don't understand this stuff, but essentially, if any of your kids play Minecraft, Roblox, anything like that, essentially what's going to happen is, or if you guys can remember, and I know I had this some friends growing up that did this. They used to play those magic cards, right? And on the magic cards, what I'm gonna do is, and on the magic cards, right? They would like each card had possessed a different power, and they would collect them. They go to the store and collect them and buy them and so forth. They've kind of taken that same concept and they've digitized it, right? So now they'll make like let's just say you're playing a game called Roblox, right? And I don't know if Roblox has this capability yet, but I'm using Roblox example because I think we all can understand what Roblox is. But you buy an avatar and you soup your avatar up, right? Now you can own that avatar with smart contracts and Ethereum, and then you can sell it. Now, because you made that avatar, you can sell it. So let's say I sell it for $10 in Ethereum. You can write in the contract, because these are all smart contracts. Now, I'll actually talk about this in a second, but you can write in the contract that you want to receive a royalty for it, or the third person that gets it has to kick back $25 or something like that. People can make a lot of money. To explain this, there was a cat sold a couple weeks ago. It was like a little digital cat on one of these platforms, and it sold for 170 ETH. Or 170,000 ETH or something like that. It was like $2 million is what this thing cost. But it's kind of insane what people are doing with these collectibles now. So I would tell you there's so many different ways to make money in it. So kind of circling back, we're going to start with the cryptocurrency. So I kind of explained what Binance was. For those that don't know Ether, this is the most important one. And please tell me if I'm freezing up, okay? Because I need to know. I want to know if my audio is good and clear. All right. If Bitcoin is the gold, right? Ethereum is the oil. Okay, you'll hear a lot of people say that. I'm not the one that originated that. I'm just taking that from other people. So what Ethereum essentially is it's blockchain, so it's decentralized, right? And you have a bunch of different computers, and what it does, it's a smart contract. Okay, so the best way that I can think of it is when it was first pitched to me, I thought about like houses, right? Because if you have to have a contract, you have to have two parties, right? Come to an agreement, right? So that's the agreement part. Then you have to have somebody enforce the agreement. So right now in our society, um, we have contracts, and let's just say somebody, it's a house, right? And there's dispute inside of that contract. Where do we have to go? We got to go to court and dispute this in front of a judge. Now, the judge could have their own predisposed biases, right? So they could say, well, I really want this person to win this deal because they're from my area and I know their mother, right? And they could side with them, which is totally unfair. Okay. What Ethereum does essentially is when you first create the smart contract, if there's money involved, they can hold it into escrow. So let's say it's you're doing a bet. Let's just gamble, okay? We're Hawks versus the Pistons, okay? And you saying I say the Hawks gonna win this game. All right, I say the Pistons gonna win this game. That's your contract, and it's $100. So each party puts up $100, okay? And as soon as the game is over, Hawks win. I get the other person's 100 and I get my 100 back because it's automatically done within the constraints of the contract, okay? Now, how ETH works though is you think about this. And I'm going to use this example of, are you guys familiar with Parler, right? So Parler was the Twitter for the conservatives, right? They would go on there, say all kind of wild stuff like that doesn't happen on regular Twitter anyway, right? But they would say kind of stuff that wasn't that these people weren't happy with. So what they did was, because they already kicked the conservatives off of Twitter, so they already kicked them off Twitter, they created their own platform, right? And what a lot of people don't realize is the internet is actually owned by, it has to run on servers. So in order for your website to work, your app to work, it's got to be hosted on a server, okay? And so that server happened to be owned by Amazon. And Amazon said, you know what, we don't like what you were talking about on your own private website, and it doesn't meet our whatever. And so we're going to kick you off. So they had the ability to kick them off because they're a centralized server. That would never happen on a decentralized network, right? So if Parler were to move their app and have it hosted onto Ethereum, right? They have to recode it for one, but they could do that, have it hosted onto Ethereum, and nobody could kick them off because nobody's control of Ethereum. Now you do have a dev team, a developer team that it makes enhancements and increases it, but it's an immutable ledger. Nobody can kick them off. Nobody controls it. How it works is though, to keep your app or keep your website hosted on Ethereum on the ERC20 platform, you got to feed it Ethereum. So you have to buy Ethereum and pay Ethereum into the system to get it to do what you want it to do. Okay. And so that's what the term gas is called. So you'll actually see Bitcoin dominance up here. You'll even see in some other places, you'll see gas. So if I go, let's click let me click one that has to use Ethereum. So Litecoin, okay. You should see something called a gas burn in here. And that is essentially how much Ethereum it takes to move that product. Now, Litecoin can move on its own, but to move it on another network is called gas. And I'm trying to see where they store this thing. Okay.
While you're looking at that, my biggest concern, and not even concern because I had Ethereum back in
Here goes gas. Okay. Yeah.
Is the number of coins that these smaller coins have circulating. So if you go back to your main screen, you can see that Ethereum has a significantly, I mean, it's cheaper, has a lot of coins. So if Ethereum does pick up speed and gets to quarter of Bitcoin's price, let's look at the not the market cap, but how many coins in circulation that they have.
So, okay, you're jumping ahead of me because what I'm trying to explain right now is like you're going to intrinsic value of them, and that's going to happen. But some of them, they don't, because you create that, you can say, I want to have, like with Ethereum, like Bitcoin's only 20 million coins that are ever going to be minted, right? But with Ethereum, you have to have a lot of coin out there because it does something. Like Bitcoin is just a store of value. It sits back just like gold. It has no use case, right? All it is it's a store. It's a place where you can go and store your money, and you know that nobody can get it unless they have a certain codes, okay? And I don't care if you're the police, I don't care if you're the FBI, I don't care if you're the Iraqi government, you cannot get to my thing because you have to hack 1 million computers to get into my bank account, right? So that's what that is. Ethereum is a platform, so it's going to require. So what Byron is talking about is, okay, I've gone, just so you guys know, I'm on CoinGecko, right? I've clicked into Ethereum. It's going to give me a lot of information on this page, okay? And one of the things it's going to give me is, okay, the price in dollars, which we said again, it's good for us to know that, but really what we want to see is the price in Bitcoin. We want to see how strong is it to BTC? How is it growing faster than BTC, right? And then you got your market cap and you got your trading volume, but you're talking about your coins in existence. Let me see where that's at.
The rotation.
Yeah,
It's on the main screen. I think it was.
the issued coins. Market's got to be
No, the
somewhere
main,
here.
it was on the main screen.
Okay, circulating supply.
There
Okay,
you go.
so it's got 114 million in circulated supply, and what this means is how many. So that's the infinity sign. It means how many additional coins can the owner put out. So this, because Ethereum has moved to a new protocol. It used to be a finite amount, but they've now expanded that because there might be a need in 2027, might be a need in 2055 to put more coins out. So let's look at one that, we'll click Bitcoin, right? So do you see Bitcoin has 16 million in circulation, 16.36 million in circulation, and only 21 million coins will ever be minted. So what happens is that's what the mining aspect is. They're mining new coins by using the energy to mine new coins. So what the miners get paid are the new coins. So they get the ability when they're keeping their computers on, and the way that they're getting rewarded by keeping that GPU power into the network. So allowing the network to utilize that power, they're mining coins. Okay. So depending on how many kilowatts are being pushed out into the network, they get a reward. And the reward back is actually one of the existing Bitcoins. And then since they have the Bitcoin first, they have the first right to sell that Bitcoin to you, the public, or they can hold on to it and let the value grow and grow and grow. Okay. So that's why like the companies Mara and Riot, these mining companies, they've got big rooms, big football fields full of GPUs. And I have one in my computer I can show you, but they're little white computer parts. They're the graphic cards essentially, and they're plugged into a bunch of switches, and they're just pushing out. They're just all they're good at doing is doing mathematical calculations, right? But that's the power that's needed to push the system and to propel the system. Because think about Facebook has servers, Google has servers. Do you know the computer power it takes for you to ask a question? What are these spots on my feet? You know, and it has to search all these computers all over. That takes computing power, right? And so Google pays for the computing power because to get how they get paid is they can take your data and they can resell that data to other people. Since there is nobody getting paid, there's no company getting paid. The how the system pays itself is by mining. Okay, so there's somebody or a team of people back there that are mining these. So we can look at like Polkadot, right? Polkadot has almost 1 billion coins in circulation, 963,493,193 coins. And they're only total going to have 1 billion out. So what's happened to Polkadot is the price has actually exploded. This has been one of the stronger coins. See how he says, okay, this is a perfect example right here, $30.36, and it's up 7.3%. I'm guessing this is for the day. And it's going to say this number right here, and I highlighted it, but that's how much Bitcoin it's worth. So this is, these are called Satoshis. So as it goes past that dollar, it's Satoshi. So it's like 61,668 Satoshis. Okay. And then that means it's up 4%. So actually, even though it performed, it's up 7.3% in dollars. If Bitcoin has a great day, so Bitcoin actually grew as well to the US dollar. So what's showing you is the dollar really weakened hard. So not only did this beat the dollar, it also beat the Bitcoin, and that's what you want to see. Not every coin does that. And I'm gonna actually, I need to go back and explain. This is going to be the one that I'm going to tell you guys to jump on right now, is Cardano. And really even, I mean, let's look at Uniswap. This is another one that had just a crazy run. Uniswap is an exchange. So essentially it's an application that's on the computer, and you can go, and if you have coins, you can just click a button and exchange them. And so this thing is just, it's just tearing it up right now. This would be another one that I would tell everybody to really consider to get into. Okay, you got max supply. So all this is good information. Now, I'm not leaving anybody. Anybody have any questions real quick before we really go into the deeper dive of this stuff? Any crypto questions? Anything you want to explore? Somebody asked about Dogecoin. Okay, if you look at the coins, right? In the last 7 days, everybody's strong. Everybody's strong. When you get to that Dogecoin, something happened, right? And typically, when you see a downward trend like this, it means it's been pumped and dumped in the world of crypto. But in this case, I mean, that's exactly what happened with Dogecoin. Elon Musk pumped it up. But for those that are asking, is it a good long-term investment? I can't tell you what to invest in or invest not in. I'm not an expert in this by any reasonable length, but I can tell you that the way it started was an absolute joke, right? So they started Dogecoin as a way to because like everybody, like, I mean, I don't know how long you guys been doing this, but so crypto started years ago. Like we talking about '09 Bitcoin came out. So about 2013, there were all kind of companies coming to the front, starting their little coins, right? And they did everything. Some of them were scams, some of them really tried, but everybody took themselves serious, and they were coming out trying to do the on stage events, do all these fancy what's called white paper. White paper is like it's your business plan for the world so they can read it. You have these developer notes and all this stuff. And they were just so serious. And so the guys that created Dogecoin did it as a joke. They were like, let's just put out a dog coin, right? And we're gonna put a dog on it, and we're just gonna have it joke and it's laugh. And this thing sat there. We can go back historically, so you guys can see this. Let's go back. Let's go back to Max. All right. So this thing sat there at when this thing first came out in 2013, in December 2013, and it was, I don't know if you guys can see that price. It's on the screen. So it was not even a 1/100th of a half a penny, right? It's so far down there. That's not Bitcoin. That's actual dollars. And so it stayed at that route. People just kind of bought it just as a joke, and then it caught a little steam in May 17. And what was happening in May 2017 is kind of where we're at right now. Crypto market got absolutely on fire. You had a bunch of people that didn't know what they were doing, jump into the space, trying to make some quick money, and they were buying everything, right? So Doge had a pop from there, and it went from, I don't even know how to count that, 1/1000th of a penny to actually like it out. And I think at this point, it almost broke an eighth of a cent. So imagine back then. That is a huge multiplier. Okay. So then it spikes up and then it goes down. This is where crypto kind of fell dormant the last 2 years. So in 2019, really up until May of last year, crypto was kind of dead. Right. And then in May, it sparked. And really in October, we started to see the crypto. I got a call from one of my friends and he told me, man, you should really look at Bitcoin and Ethereum again. I had actually stepped away from it. I said, nah, man, I'm not playing with that. I had lost some money. Not even that I lost money. I just lost time. Right. And Bitcoin and all that stuff. So I was like, I'm focused on stocks right now. As I look back, it's the biggest mistake I made, because if I had got in, or we had got in collectively, and I know some of us on this call probably did get a chance to bite back in October, November, everything you have been up 400 or 500%. Okay. So if you look at let's just take Dogecoin for an example. And this is why you can't, even it's a joke, it made tons of people probably millions of dollars, right? So in the last 30 days, Dogecoin is up 503%, right? So as an example, let's pull up Tesla, right? Which everybody knows Tesla has had a heck of a run, okay? Dang, I spelled that all wrong. Yes. All right. So Tesla, we pull up the charts in the last 30 days. Heck, we can go back the last 6 months on Tesla. Tesla is up. Let me go back 30 days. Let me just go back 6 months.
It's 30 days.
Yeah, I'm gonna go, and I know. Let me go back because my screen is not the full size. So if I go back, if I go back to, what day is this? It doesn't even tell me what day is it. This thing is so weird. I gotta spread my thing out. But this is 6 months ago, roughly. Okay, this is, I don't know. We'll go back to this high. August 31st, Tesla was at $444. Since then, it's been on a 50% run, tear up. I mean, it just tore it up. So can you imagine having 10 times that in 1 month, right? That is the opportunity that presents itself with crypto, right? The catch is you just gotta kind of learn what these things do, because right now they're all still going to fluctuate up and down, right? And so let me go back to this the screen that I was on. So 532% last, if you would have got in 2 weeks ago, it would have been up 72% to its today. Now, if you would have gotten a week ago, you would have been down 20% because it ran up, right? If you got in a day ago, it ran down too. So that's just kind of showing you the power of these coins. And like, you can't, even so somebody like myself says start off as a joke, it's a joke, it's a joke. You can't tell me that within a year having something up almost 2000% is a joke, right? So if you put $1 in there, that if you put $1 in there 1 year ago, you got $1,818. That's not a joke. So imagine you put $10 in there, right? Now you're talking about some real money, okay? And you just had the stomach to hold it through. So any of us that are playing options in the stock market rarely know this right now. You can hit your number, but you got to have the stomach to see those to weather through those dips, and it really gets hard when you're watching it. So I can imagine somebody holding Doge on September 15th, and then come January 8th, they selling out everything. You know, this little dip, this little jump right here was crazy. So imagine all the people that sold, because you can see a lot of people sold out right here because it dipped back down. So imagine if it got there and you sold and you said, I killed them, and then all of a sudden it did this. It ran all the way up. I mean, it's just insane amount of money. So real quick, I want to go through a couple of these other coins real fast, because that's the other thing I think people, and this is going to be real quick. If you guys want like detailed data, I can kind of go through them a little bit, but you know, it'll be more of a group discussion. So Bitcoin is gold, Ether is oil. Hopefully everybody gets the importance of Ether and those smart contracts. There are a lot of very smart people, Mark Cuban being one of them, a lot of long-term crypto investors that say, if you are going to build a portfolio today, you build it with Ether, because just like gold, it sits in your bank, right? And it doesn't do anything. You need gas to ride in that car. So there's more people that need gas, the more people that need the fuel, there's going to be a more demand for this. So I've seen things on the internet, and people can't even believe, just to put this in perspective, right? The all-time high on Ether was $1,400 prior to this current cycle that we're in right now, right? So not only are we past the all-time high, which happened in 2018, we've blown the doors off, right? And there's a lot of consensus that we still are in the middle of the new growth cycle, right? Because how crypto works, and I just hate to say this, I mean, this is what's going to happen for all of us that are looking to playing with it. It goes down. It has a lot of spikes up and down. It is going to have a gigantic spike. And once it hits that gigantic spike, which we could be at the top of it now, we don't know, it's going to free fall, and it's going to lay dormant for a cycle, right? So this is a cycle right here, early adapters phase. Then you have the big push where you get a lot of people that are coming into it. Now, when it gets this extreme, this is the mass market coming into play to say, oh yeah, around the dinner table, I heard about Ethereum. And the problem is, because they're nervous, there also are news people that are telling them, or Warren Buffett and Bill Gates saying that it's a scam, and when people in the underworld do it, they don't have strong hands. The people that hold through here, and you guys know this from the game stonks, is diamond hands, right? The people that make the most money in stocks, the people that make the most money in crypto, are what we call diamond hands. Anybody know what diamond hands means? You hold it through no matter what. If it goes to the moon, if it goes to where you hold it. You hold it through no matter what. Most people, probably like myself, you run it up, you make a fair gain, and you move it out and collect your profits, right? Because the thing about diamond hands, they made a lot of money on this run. And can you imagine how sick you would be if you had, I mean, at this point, from going the beginning of Ether to where that's at right now, is probably 1,000 times growth. And then to see it go back down to essentially where it was almost at to start, that's dehumanizing, right? It takes a lot, and it's going to go through that again. You just have to be prepared for this. So this is what I tell you guys: when you guys invest in Bitcoin or cryptocurrency in general, make sure, oh, okay, make sure that you are have the stomach to hold it through the dips, man. And like how I'm doing this is, I'm on a 5-year play. So this money that I'm putting into the market, it's going to be for 5 years, and I'm not touching. I'm going to bite my nails because I know it's going to go from today's highs to tomorrow's lows, and I have to weather it. But what I've learned is by looking at the cycles is that's how you get paid in this industry, right? So kind of gave a breakdown of the ether. That's the one. Tether is just, it's just $1, right? So this is a safe way to get in and out of your play, right? So if it's $1, what you do is, let's say ether has ran up, but you don't want to take your money to fiat, because if you move to fiat, fiat is regular dollars, right? What happens if you go to Coinbase and you say, Coinbase, I just made a ton of money on ether and Bitcoin, I want to go to dollars. What happens? The tax man cometh, okay? They're going to tax you at 40, 50% or whatever new laws they make up. And a lot of people know that, look, I'm just weathering this dip. And so if I got to get taxed to come out and then go right back in, it's not even worth it. So what they do is they move over to tether coins, USDT. So this is tethered to exactly to $1. So they do whatever manipulations to get that to be worth $1. So let's just say you ran up your Bitcoin, you bought Bitcoin at 10,000, now it's 50,000. And you say, you know what? I want to take my profits out because I feel like it's going to dip. So you take your 40,000 you made, you move it over to Tether, and you keep your 10,000 in Bitcoin, right? And that's what that's used for. So this is what's called a stable coin. For anybody that wants to know, there's several stable coins through this list, but Tether is going to be obviously one of the more valuable stable coins. Polkadot, okay? So Polkadot is a whole system, okay? So Polkadot is like Ethereum, but they have their own app store. They have their own protocols. This, to me, if I were telling anybody to get into the space right now, I would tell you to invest in Polkadot and Cardano, because even though they've run up a lot, right? So 30 days, 78%, you don't have the crazy run up. I mean, these are crazy roadmaps, right? In December, this thing was $4.80. So can you imagine in December, let's just go to this right before the dip, December 25th, Christmas Day, right? Or 24th is Christmas, one of the right around Christmas. It's $5, let's call it, okay? And today it's $30. You had a 600% increase on your money, right? So just think about that. And this one has still got a lot of room to go. This one will be, I mean, in the short term, considering that they've already, so this is the coins that are currently minted. These are the coins that they're going to push out, considering that they only have, you know, maybe 100,000 more coins to push out, not even that much. This coin is probably going to go through a good increase, you know, and again, I can't, I'm not the one to do a financial analysis on where it's going to go, but I can tell you it's going to grow. Okay. So Polkadot, DOT, write that one down. Now, if you get on this system, you say, okay, all these coins, where do I put, how do I buy them? I mean, that's the number one question I think I get is, Mike, where do I buy them from? So you click the coin just like I did. So let's just go back, start it over. Okay. You go into Polkadot. So you look at your list, this is the intro on the website. You click whatever coin you want to go. And then you're going to go and you're going to scroll all the way down. Okay. And you're going to scroll right down until here it says exchange. Okay. So these are the exchanges that you can find this on. So the number one exchange in the world this is on is Binance. So you got Binance USA. Then you got Bitfinex. Okay. Cubai Global. So the nice thing about it is, let's just say what is Bitfinex? I don't know about that. I click into whatever that site is, and then I can actually get on. Now, a lot of them have, so they gave it a trusted score of 9. You can actually go and click into the website right there, and then you would just go and open you up an account. Okay, sign up and then go through the whole thing. Now, hopefully you already have some type of crypto in a wallet stored somewhere. Either in your Coinbase account. You can't use the crypto that you have in Cash App or Square or Robinhood. I'm sorry, Cash App or Robinhood, because it's not really real crypto. You have to have an actual wallet. So I recommend everybody to do that through Coinbase or Coinbase Pro. It's just the easiest one. So anyway, let me back up. This thing is on my screen. How do I get this off my screen? Okay, I had to move that. Okay, so going back to to the coin gecko. The other one that I want to talk to you guys about, if I had to leave you guys with one today, like everything that I've been saying is also talking about this Cardano. So if you look at this, right, this is going to be your price to dollars again. Okay. This is going to be your 1 hour movement, $2. Okay. So this is down 1.1% on the dollar. 24 hours down 1.8%, almost 2%, which we call that flat in the crypto world. If it's not swinging 10 points, it's flat. Okay. And on the 7-day, this one is up 22%. So if I look at 7-day Bitcoin, and we know Bitcoin just broke 50 G's today and it fell back a little bit, but it's only moved 5.6%. Okay. Not a whole lot of moving down there. Ether, it's actually down. So that tells me it's an opportunity to buy Ether. When it's down, especially in this strength dominance to Bitcoin, I want to buy as much Ether as I can get. Okay. Because it's weak right now. And Polkadot is up 30% in the last 7 days. Cardano's up 22% in the last 7 days. So one thing about Cardano, this is why Cardano is interesting. We just talked about all of the fantastic opportunity that Ether has at $22,000, $1,700 a coin. It's the gas. But I was listening to this guy that started the Cardano. This guy's named Charles. Something regular looking dude, lives in like Canada or something like that. You could tell he's just an internet nerd. I mean, these guys feel like you can just zoom them, and his coin, oddly enough, is worth $27 billion. Okay. So when you see market cap 27 right there, that's not millions, that's billion. Okay. So if anybody's looking at market cap of these stocks, that's a big company. Okay. And so the way that he sold this is he said that people right now don't know the value of their privacy. Okay. And so this is why they see crypto exploding. Right now, we happily give our data to Facebook. We happily give it to Google. We happily give it to Apple. We happily give it to Samsung, YouTube, and all these other players because they're doing a service for us, right? But once we have smart contracts, right, where the service is done automatically on the network, right? We don't really need to give anybody our data because that's how they get paid, right? So what's going to happen is these protocols are going to explode. So if there's a Parler, or if there's a, Black Twitter, you know what I mean? Or if there's a whatever group, that's why these governments get so afraid of terrorists getting on it, because they can't stop it. They can't control the money flow. They can't stop the messaging. It's impenetrable. It's immutable, right? But what Cardano is, and what's interesting about Cardano is they've actually, so Ether, for those that don't know, it's called ERC20 is their platform. Ethereum is the coin that uses the power of the ERC20 network, right? And they're on protocol 1.0. So because it was like the first, and Ether started out as a project. It never started out as like a real to life concept, right? So it started off as a project, and it just grew into what it is today. So they, as it's gone along, they've just say, oh, we can do this, and they tweak it to do that. But that's not necessarily what it was designed for. So there's a number of flaws, and it takes a long time for the developer team, which is a big team, to go and put in new workable items, right? Cardano started much later than Ether, okay? And they were able to learn from Ether's mistakes. So it's like saying this, okay? So a lot of us have been on social media, and I kind of use this since the days of Black Planet, right? Black Planet was great. What came after Black Planet? Does anybody remember? MySpace, right? And so after MySpace, what came after MySpace? Facebook, because Facebook, so what I mean is, like, the innovator, whoever usually innovates the space, doesn't really necessarily become the go-to, the vessel. There were over 40 browsers that tried to start the search engines before Google did, okay? And so with Cardano is that the reason there's so much excitement around this one is because a lot of the developers actually like this. They figured out, they were able to cut out a lot of fat, and they're able to bring processes to the market much faster. So from us, from an operating standpoint, if we go back and just look at, let's compare a couple of things. So we go back now, Cardano is top 5 already. So it's already in what we call a stable coin. It's going to be around. For those who've been trading since 2017, Cardano was around in 2017. So let's just look at Ethereum, okay? Ethereum is absolutely huge right now. And Ethereum's got a market cap of $202 billion. It's twice as large as Square. It's twice as large as Cash App, okay? To put that in perspective, that $202 billion is around the same size as Visa. Just to put that in the context of a company that you guys may know, okay? So if you look at Cardano, right? And they are $27 billion market cap right now, which means they have a lot of opportunity to grow. So let's just say they only ever become half of where Ether is right now. And that's what they become in the next 2 years. Well, you got a 5-time growther on this one. And this is the thing about the Cardano coin. It's only 86 cents right now. So you could essentially
question.
Yeah.
How long has that market cap been there? Because like I said, I invested in Cardano in 2018. So can we go back and see what the market cap was in 2018?
Yeah,
I was the first ones to invest in Cardano.
Yeah, so what you want to do is it's not going to be found on PriceGecko. If you want to see that kind of information, you got to go to CoinMarketCap because that's kind of what they specialize in. And so you would go down to click Cardano, and then you would go over to the market cap. So in 2018, when you had them at the high. So it's kind of like if you look at price to Bitcoin,
about 49 cents for each
Cardano, but it's again, you're looking at in dollars when dollars have been diluted down greatly already. You know what I'm saying? And so it's kind of hard to peg it on dollars because we have inflation that's hit in the last couple of years. You look at the price to Bitcoin, okay? So actually right now it's much stronger to Bitcoin than it was, but the market cap of Cardano was $21 billion. Let's see if we can get to this height. It was right around $29 billion.
Would you say it was today?
$29 billion was the market cap in January 2018. And then today, the market cap is 26 billion.
So it dropped a little bit.
Yeah. But again, because people lose faith in remember, this is off massive hype, and they've got to, prove the product. And so it's just like how we invest in those SPACs, like we say, oh, we're going to invest in Lucid Motors because Lucid's the next Tesla. But really, is it? It's got so far, it's got at least, realistically 10 to 15 years before they can catch up to Tesla where Tesla's at today.
But I still think that Bitcoin, Ether, and Litecoin are still the best ones to invest in.
And that's true depending on what you're looking to do. But we've already proven that they're not if you're getting in it today, right? Because they're already pushed up. It's like saying somebody's trying to invest today. You tell them, hey, I heard Tesla and Apple are the best stocks. You're right. They are the best ones, but are they going to give you the growth that
the next Looser? Go back. Can you, I'm sorry to cut in, but go back. Looser? Was that Looser you said?
No, I'm talking about stock. We're just using like example. Lucid is on the stock market. This is the crypto market. I was just giving him an example. You know what I mean?
I like it, but see, the thing that scared me off with the crypto market is because you had a lot of these CEOs that were getting there, like, a ton of them got sued now. Floyd Mayweather, T.I., they would go in there and they would jump behind these coins and they would dump them. You know what I mean? So then the only person that gets left with making no money is consumers like myself. So
it happens in the stock market every day, but what you don't realize is when the stocks go down, you think that it's other people selling it. It's not. It's big money institutions that are selling it. See, when the price of Apple drops $3, it's not because everybody on Robinhood decided to sell Apple. We can't make it. We can't do that. It's because some big equity firm decided to sell their share or shift shares or short it. So what you're seeing is just on a smaller, more volatile scale. So because this is a pure growth market, right? You're going to have the fluctuation whenever anything grows. So look at stocks that's why when I was telling Chuck earlier today, I don't really like to play with the penny stocks as much because they're so volatile, right? Yes, they'll go up a lot, but in that same sense they go up, they can drop just as fast. But you look at a company like Apple, you look at a company like Microsoft, those long established companies, they just kind of move up real slow. These companies and their growth potential is exponentially higher than the companies that are in the stock exchange, just because it's all emerging new technology. They're building the infrastructure right now. So there is nothing decentralized. Everything in our world right now is on a centralized nature, but you can tell because the big companies are hiring the devs here to kind of figure out, okay, how can I take advantage of the decentralized, but then have it when it enters my space centralized where I can control it. And that's what, like, give you an example, a good hybrid is XRP, Ripple, right? They're a centralized coin on the decentralized platform because what they're designed for is to move money from banking institution to banking institution.
Only problem that I have with Ripple is they have so many coins in circulation.
It doesn't change the fact that Ripple has seen a massive
Ripple's only went up 20 cents
price jump. So like, I mean, again, these are all like, the thing about investing, and they don't care about your feelings, you know what I mean? Like, it's gonna go up, it goes up. And let's see, I like to use CoinGecko a little bit for, it gives me a little bit better data with market cap data. I do use Coin Market Cap, but if we use XRP for an example, right? So again, how do you feel about XRP? And I would be just like you, Byron. XRP is not my favorite.
Like XRP.
It's not my favorite because it is a centralized nature, right? They can control it. So it's really no different than having an Apple or Google or whatever, right? But with that being said, if I would have invested in it 2 weeks ago, I'd had a 40% return on it, on my money.
Yeah, that's true. I mean, we got crazy returns on everything. Bitcoin, everything.
40% in 2 weeks.
40% is insane. That's a good return.
And that's kind of one of the more conservative. It's a disliked coin, right? So we can go. Let's go to Litecoin. This is a darling, and I'll tell you why Litecoin is one of the ones.
It's my favorite. Litecoin is my favorite.
Reason why Litecoin is going to be key as far as an investing tool is because we still don't understand how powerful Coinbase is, and Coinbase now under Coinbase Pro, they have multiple coins, right? And now as there's a lot of buzz and excitement and activity around cryptocurrency, people are going to start investing in them. And just simply because it's on Coinbase and it has decent returns and it's cheap, people are going to invest in Litecoin. So let's look at the Litecoin returns. Litecoin returns aren't as great. 14 days though. Look at that 14-day mark, 46.8%. I'll take that every day of the week and twice on Friday, right?
But my meaning of all this is all these coins are going up because Bitcoin goes up.
But that's exactly why you don't pay attention to what it's doing to the dollar. You pay attention to this one right here, the Bitcoin dominance.
Bitcoin
because you want it to be
coins.
So with this one compared to Bitcoin, if you would have bought Litecoin within, let's just say this morning, and you had an opportunity to buy Bitcoin, you would actually lost 5% on your investment. Because had you bought Bitcoin, you would have made that extra 5%. And that's why that's so key to pay attention to that. So once you enter,
are there options for Bitcoin?
No, because options are where somebody is an institution already has them, and they're giving you a spot price and an advanced price. This is so new. That's just like going to like the penny stocks or the recently IPO. There's no options for them. Institutions have to collect those. So as institutionalized money moves into this space, in a couple years, there definitely probably will be something like an option play. But let me show you some other stuff. Byron, do you have any questions? Chuck, you have any questions? Because
I have one thing. There was a certain thing that's not a very option is very similar to a Bitcoin mining contract, which is very similar to an option on Bitcoin. So meaning that you can pay a certain amount of money and say, hey, I think that if I'm going to buy in this mining contract, I remember I know several people that had it back in 2018, and it's very similar to an option on Bitcoin. You're paying a fraction for it, but you're still getting the gains as that mining contract grows.
So kind of, not really. Okay, so it's just what it is. So like there's a miner, right? And because the miner needs money to buy more mining tools, right? You loan them Bitcoin, right? You loan them money. You see what I'm saying? And then they take that and they buy tools, they buy miners with it, and based on whatever percent, let's just say they're miner, they have 100 different machines that mine, and yours mines.
Explain what a miner is. Like I said,
I said it before you got on the card.
Yeah,
It's
what
a
the
graphics
fuck you can
card.
give me? I'm like, what the fuck is a miner? What the fuck is that?
Okay, so what a miner is so let's just say you can use your phone as a miner. You can use your laptop as a miner. Anything that has a graphics card inside of it. And the reason it has to have a graphics card is because graphics cards, when you write computer code, like to the basic binomial level, it's just ones and zeros. And there's a lot of math in those ones and zeros to come up with the stuff that we see on the screen. They put those ones and zeros in a certain array. And so what the graphics cards do is they're just very fast computational devices. They're extremely fast at multiplying, dividing, doing math. Okay. And so they're really designed for video games, because when you have all these different textures and different scenes, there's all kind of data that's coming in. It has to be interpreted.
Who's behind that? Like Broadcom? Who's behind it?
NVIDIA makes most of the NVIDIA and AMD will make most of the graphics cards. That's why right now it's almost impossible to find a GX 3600, 3800, 3900. Good luck.
And you know something though, being that you mentioned them, Mike, they both got me on an emotional roller coaster today.
Because because again, Norris, 5 years, man. If you look at it every day,
I'm going nowhere, but I'm saying, man, but it's just like an emotional roller coaster every day.
Yeah, it's not designed for that though, right? It's not designed for that. It's like you literally supposed to buy it in, and that's the point of buying good.
But I ain't gonna cut in too much, man. You can go finish with the Bitcoin because I wanted to hear the rest of that.
Yeah, so okay, to switch back onto the mining contract, for what Byron was saying is he's right in the fact that there's money to be made as long as the company's not a scam, because what was happening is the companies were saying, oh, we're going to give you back 1 Bitcoin for every one you give us, and there was no way to possibly do that, and it was a pyramid scheme. But the new age mining contracts are a little bit different. I'll actually explain one that happens on Ether that I think is really interesting, and we'll get down to the coin. I'll show you guys in a second. But to the point is, you give the miner X amount of Bitcoin to hold. They go buy the mining equipment. That mining equipment puts out a certain kilowatt, right? And let's say they give you 5% of whatever piece that you buy. So you say you buy a Bitcoin, they're going to give you a return. So for 1 Bitcoin, they're going to give you 5% on that Bitcoin for a year. So now if the price of Bitcoin goes up, you're going to get 5% times whatever value the Bitcoin is. If Bitcoin goes down, you're going to get 5% of whatever the price of Bitcoin is. Whereas an option, if it doesn't hit its price, you lose everything, right? So that's where it's a little bit different. Now, what's interesting, now I'm going to keep going down this list real quick. So we got XRP, it's how banks move money around, real centralized. If you have to have a diversified portfolio, it might not be a terrible idea to hold it because it does give gains, but ultimately it's not my favorite. I think you can have better upside opportunity. Now, going to the next one, Binance Coin. Binance Coin is pretty interesting too, because when you go to a lot of these different exchanges, so we know Binance is an exchange, there's a KuCoin exchange, there's a Gemini exchange, there's a Coinbase exchange. So a lot of times when you're trading coins, right? So let's say you are going on Binance and you want to buy XRP, right? Because some coins are on the ERC20 protocol, some of them are on the Polkadot protocol, some of them are on the Cardano protocol, meaning that they have different wallets. You can't necessarily send different kind of coins to every wallet, right? So what Binance Coin is, it's an intermediary. So essentially, Binance has created several wallets that work with every coin, right? And they've locked down the price of their coin. So a lot of times they try to keep it, it was $1. I mean, this thing used to be so cheap, Binance Coin. I remember we were buying it for like $9 back in the day. I mean, just look at it over the year, it's 488% up because more people are trading, right? So essentially what happens is, as you want to do interactions on their trading platform, and you want to go from XRP to Bitcoin, you have to use Binance Coin. So you have to go XRP to Binance Coin, then you have to take your Binance Coin and take Binance Coin to Bitcoin. So if that makes sense, that's how you buy a lot of these strange coins, and you store them in wallets called cold wallets that you download from the company's website. Okay, so that gets a lot of techie stuff, but Binance has some.
This shit sounds harder than fucking Chinese arithmetic to me.
Okay, like this, it's just different because a lot of the stuff that you have to kind of understand, the banks are already doing it for you, but the banks and Robinhood are taking a significant fee. with crypto, you're essentially eliminating the middleman. The computer is the middleman, right? So right now, if you want to go make a purchase in the store and let's say right now, Home Depot got aisles that don't take cash, okay? Well, you got to pull out your Visa card. So you got to go and swipe that Visa card, and Visa takes a fee. Then at the end of the month, you got to pay Visa by going through your bank. Your bank's taking a fee. So, but all you really want to do is get your money from your pocket to Home Depot. But yet two middlemen were in the way and got paid.
As far as this goes, some of these things I'd rather sell over lunch than to sell over the internet.
So how I look at this, if you have invested in different coins, when Bitcoin goes up, you make money on all of them. It's very rare that you're going to see Bitcoin going up and you don't make money on Ethereum. When Bitcoin is tanking, Ethereum is tanking.
It's not true. Okay, so
for the most part of it, it is true.
You're thinking about it from a standpoint of dollars, but when you're in this world, you're going to have to snap that because you'll lose a lot of money fast. Okay, and the reason I'm saying that is because if Cardano's exploding up, right? But because all of these are different currencies, right? They're all moving at different currencies. So let's just say and something happens in our world where where the dollar drops, right, in value versus everything else. So what may happen is you'd be like, dang, Bitcoin is up. But in the real world, meaning the crypto space, it might not be that case. It might be that the dollar just fell. You know what I mean? And so because we're only used to having this IOU slip called the dollar, we don't live in Europe where we have to trade against a bunch of different currencies. We got to make sure, Africa, we got to have 10 different kind of currencies in our pocket. We were lucky enough to have only one currency, but sometimes it's a weakness in us too. Because if the dollar falls, let's say Bitcoin is worth 50,000 US dollars, if something happens and Biden signs something and now the stimulus package, right, puts $1.9 trillion into the economy. Now it says, wow, Bitcoin 62,000, but they didn't do that over in Europe, right? So in Europe, compared to their whatever, it might only be 54,000. Right? So you might say, dang, it jumped up 10%, but then you look at Cardano might have jumped 40% on the dollar. But so that's why you got to watch what it does with those alts towards Bitcoin. So you have to change your mind to Satoshis instead of dollars. It sounds crazy, but it's a lot of different calculators you can use inside the platform. But overall, generally, Byron, you're right for right now because it's still growing, but eventually you're going to come to a spot where Bitcoin literally levels off. Okay, and all these other coins are still going to explode. You're going to have coins that come. I mean, we go down the list.
We can look at the numbers right now. It does level off because it's 50,000 versus 49 cents or 86 cents.
Okay, so
you're going to have a bigger growth for 86 cents than $50,000.
So let's look at like this one, right? So this one is down 9% to the dollar. Okay, so it's saying it's down 9. It's because this coin is called YF Link. It's down, it's 99 cents. So it fell 10% on the dollar. But compared to Bitcoin, it fell 12%. You see what I'm saying? And compared to ETH, it's down 9%. But compared to Bitcoin, you took even a bigger loss. So where you're thinking, I'm only down 9. No, you're down 12.
Down 12.
Because had you had that money in Bitcoin,
that's what happened to me.
Yeah.
That's what happened to me when they pumped.
Number one where people lose money in crypto because they're looking at it in a dollars perspective. Dollars is only cool when you look in Bitcoin to dollars, right? Or ETH to dollars, something that you can take to Coinbase and cash out to fiat, right? Then it doesn't really matter. The only thing you're looking at with this one is opportunity. So if I had this one in Bitcoin, if I had Bitcoin, I would have saved myself some money because Bitcoin gained today and this one obviously lost today. And that's what happened.
So my biggest thing is just saying that I think that if Bitcoin goes down to 30,000 tomorrow,
yep,
all these coins will be lose.
They all will suffer. They will all suffer.
They all
at
suffer.
What percent?
And that's what happened to me.
Bitcoin going down to 30% could be, let's just call it a 50% loss on Bitcoin. But some coins may only suffer a 30% loss. Some coins may suffer a 75% loss.
Yeah, that's true.
You see what I'm saying? Because they all have different values, right? So you have to watch that. So as we go down this list, we kind of got through Litecoin. Litecoin is just like Bitcoin. It's just cheaper and they figured out a way to move it faster, right? Because you can mine it cheaper. It's easier to mine. So the gas or the fees, remember the gas up here, the gas, it takes less gas to move it. So every time I go to exchange it, so let's say I want to send $50 to Preston, right? That to do that over the network costs money because somebody's computer has to go and do that computation for me. So I'm paying the network in gas, okay? And so that's another thing that fluctuates depending on how many computers are activated, how many nodes are activated. It gets a little complex there, but in the beginning, I can kind of explain that to you guys. But that's what you want to pay attention to is gas. So if I go to Bitcoin and it was to move some Bitcoin around, it's going to cost substantially more. Actually, it's about the same as Litecoin right now, but sometimes Bitcoin's gas is more, meaning that it costs more to move the same. So if I'm trying to, like, Byron, you remember this? At one time we were trying to move like, let's say $100 on Bitcoin because the network was all messed up. It would cost us $60.
It was really slow.
Yeah, and it'd be, or if because you could put your own price in there too. You say I'm not paying over $10 to do it, where it might take 3 days for you to send it. But if you say if the going rate 60, you say I need it there in 2 seconds. You put $90, it's gone in 2 seconds because these guys are taking the highest bidder. That's how it works.
Ether definitely moves faster than it sometimes in transferring Bitcoin. I remember transferring to my wallet from Binance to my Exodus, and I would notice that Ether hits really fast compared to Bitcoin. Might take 2 hours for that.
Because you had an Ethereum, you had an ERC20 wallet.
Yeah, that may be
okay. So if you have an ERC20 wallet, it's built for Ether, right? So you have to have different wallets for all of these. Okay. So we kind of got out, but I'm gonna talk really quick. I'm gonna scan all the way down, and I'm gonna talk about AAVE. And really, oh gosh, I had this beautiful website pulled up, and nice. I'm not gonna be able to find it right now, but it was like, okay. So what AAVE is? This is tight right here, right? So let's say you go in, you buy you some, and I remember I told you, like, if you're going to go into crypto right now, you know, you're going to do some type of a split between Bitcoin and Ether, right? Because it makes sense to have both. You don't want just to store value. You want to have a little bit of the gas too, because that gives you flexibility in the future to do some things, right? The nice thing about Ether and what makes Ether so exciting to me right now is you have these different Lend coins, compounding coins, okay? So you got AAVE, you got Compound, you got Maker, and VeChain connects. I'm trying to see if Maker, here's another one, Maker down here. So Maker was the #1 of the lending coins. So essentially what they do is a lot of these new coins, the price of Ether has now $1,700, right? So if you got a new coin and it requires you to do all this fancy stuff on the blockchain, you might only have $10 million, right, to start up your business. And if you have $10 million, you divide $10 million minus your people that you have to pay to actually write the code, and you start doing all your expenses, and then you say, okay, just to run my app is going to cost me 150 Ether a day, okay, and gas, okay? So now you have to have 150 Ether. You might not have that. So what this coin does is it lends those companies Ether for a profit, right? So they lend them the Ether to use for their gas, right, to keep their stuff going. And then at the end of the month or whatever the cycle is, that those companies pay this company. And how this company gets its Ether is it pays you to let it borrow your Ether. So they have a pretty comprehensive network going on here. And I'm going to go to their website real quick so you guys can see it. And it uses DAI. DAI is a stable coin, so it's tagged at $1. Okay. But what this thing is doing is it's essentially you go there, you get into a smart contract with them and say, hey, for the next 6 months, I'm going to let you borrow my Ether, and I'm going to let you borrow it in at a certain percentage. Now, I know this one was, and I have to go to Google. This one was paying at 9%. Okay. Let me see. Lend coin pay. I'm just going to see what the coin. So this is kind of similar right here. Now this is the AAVE website. Let's go to a different one. There's kind of like, so these now you can loan out your Ether. So let's say I go buy it. I know I'm keeping it for 5 years, right? But I want to actually make money outside of the money because what if Ether goes down to 0, right? If it goes down to $1,000, I don't know if I'm buying it high or low. You can actually set it up where you lend your Ether. Let's say I go in the market and I spend 20,000 on Ether. I get 10 Ether. Okay. I got 10 Ether now, and I'm sitting in because I have a feeling I think Ether is going to go to $20,000 a coin, but it's going to take up 5 years. Well, in the meantime, instead of just letting my Ether sit in a wallet and just watching it, I can lend it to these companies that lend it to other companies, and I can make 9% a month on my coins. So they're going to pay me back in either Ether or DAI, which is dollars, every month or whatever contract we agree upon. So not only do I get my intrinsic value of the coin naturally appreciating, I'm also getting interest. So it's like a credit card, but they owe me, you know? So this makes it really interesting to how you can make money in these fields. And these are called DeFi. So it's called DeFi. Whenever you see DeFi on a coin, that means decentralized finance. It's a bank that's decentralized, you know. So, but instead of lending them money, you're lending them ether. That makes sense, because essentially, when you put your money in the bank, what are they doing with your money?
Lending it out.
They're lending it out, right? And they're giving you back a small percentage, right? So this is that to the next level. Okay, does that make sense, everybody? This is what I think is a huge opportunity for us to really think about. Is these? I think DeFi is just going to get absolutely freaking massive over the next Compound. This is the #1 player in the space right now. You know, even at $442, people are pushing each other down to get some Compound, because eventually, you know, as more platforms, protocols, websites, applications, 5G rolls out, different governments topple and need a place to park their technology.
I mean, is this not too many coins? Can all these coins win? Like, what are we?
Just like the stock market, Debo. Do all the stocks win?
Well, the stock market's a little different because not all of them is it going to compete with each other. In a sense, these coins will have to compete. There's
a lot of them compete with each other, though. If you think about it, they have sectors and indexes, right? So you have sectors, and the other day we had a marijuana stock boom. Most of those companies in some way competing with each other.
Right, within a sector, but there's so many different sectors. Like this is one sector. We're talking about.
Okay, so let's look at like Filecoin, right? Filecoin is a way to store data like DocuSign on a decentralized platform. So if I got, and again, I'm not saying this, I want to say this, you know, like, let's just say I got something that I don't want anybody to be able to delete off the internet. Maybe some pictures of a celebrity, and I don't want Cardi B's team to come at me and take it off. I put it on Filecoin, right? And as long as I'm feeding the system Ether or whatever, because a lot of these are ERC20 coins, but they can move over, and you have to like read the white papers and all that kind of stuff. It's on a decentralized storage network to store, and so it doesn't go away. So as long as Ether is being fed into the Filecoin, and as long as the people are buying the Filecoin, those are going to always, that document's always going to stay there. See, the difference with it right now is that you want to keep files on the network on whatever, you got to pay DocuSign, you got to pay Google Drive, and you got to pay them cash. This is just, it's, again, you're dealing with a protocol or a smart contract. It's not a human on the other end. It's not a Mark Zuckerberg that can say, hey, Boosie, I don't like your live, I'm pulling you down. You can't do that. So everything is eventually going to go over here is what I'm saying. It's just a matter of time when humans wake up and say, you know what, why are we letting these other people reign supreme and boss over us and tell us that we have to use them as the police? This is the great equalizer. Like people say, it's the great equalizer because you're dealing with the computer system. Can you imagine going to court and being treated exactly the same as the next person of a different hue? That's what's happening in this space. They don't care what you look like. They don't care what you bring to the table. Who won who was right per the agreement. That's all they care about. And this is why that's going to change the world. So all these coins actually do different things. You know, like, so you have Maker, Compound, and Aave that compete in the same space. But think about banking. We have PNC, Bank of America, BB&T. I don't even know if Wachovia and all those guys are still around. Discover Card. You got all these. Think about how many credit cards you have. You know, so you want to have a healthy amount of competitors because it keeps the competition down. If there was only one, like the problem with Ether, right? There really is only one Ethereum, ERC20. So what's happened to the price of the coin? It's gone up. Now, gone up good to those that are holding it for intrinsic value. It's gone, when it goes up, that's bad for the people that actually need to use it. So if I actually have to use Ether, it gets extremely expensive for me to use that product now. So now I'm going to go to Cardano because Cardano's only 86 cents. and it's for me to acquire Cardano, which is fuel for me to run on their network. And all I have to do is a little code in the back end to change that. You know what I mean? So that's why I said, so that's why, to Byron's point, if you're trying to store it for gold, like to store your wealth, I'm trying to keep my, and actually I'm personally going to make a tremendous shift away from, because I had a epiphany the other day. I was in my room just at the end of the night trying to get my crunches in. You know, I'm trying to get that beach body for the summer, right? Which I got about 6 in. I started seeing stars, and whenever I see stars, I start thinking of different stuff, and I realized like all of my wealth is either tied up in my house. I have very little money in my checking account. It's in stocks of some sort, whether it's a 401k, whether it's a 529, whether it's a Roth IRA, whether it's a Robinhood account, whether, you know what I mean, whether it's an individual trading account of Fidelity, it's all in stocks. So if something was, and if you think about stocks now, it was like back with, this is why the guys like Warren Buffett, and I know he just invested in Chevron and Verizon. You know, the reason he did that is because everything's bought up. Everything's so overly bought. You don't have anywhere to go anymore in stocks, right? So but the problem with stocks is all these companies are really intertwined. So if Apple falls, it could be another player has nothing to do with Apple. They're going to fall just because they're all intertwined too closely on the system. So when I was thinking about it, I said, you know what, where's my only real hedge against the stock market? It's the cryptocurrency market. It's because it's global and it deals with a bunch of different currencies. And the currency that's mostly cares about is Bitcoin. And Bitcoin is about to break $1 trillion if it hasn't already. Yeah. So Bitcoin's market cap is $1.5 trillion. Okay. And so if we try to say that Bitcoin eventually will, and it will, and not only will it beat gold, I think it will 2 times or 3 times gold, because there's a lot of people in the world that don't own gold for the simple fact that it's hard to get to. I got to go to a jewelry store, buy it to do what with it, right? But with Bitcoin, I think that eventually everybody will have some type of Bitcoin. So a very conservative estimate in my lifetime will be $20 trillion. So if I get in right now, that could say if I put $50,000, let's say, into Bitcoin and get me a coin, that's going to go to $1 million, right? It's going to at least 20 times where it's at now. That's great and all, but something like Ether or something like Cardano could also 20 times. And then think about all this 5,200 something coins on this list. Where's the filter at? But it'll tell you how many coins are on here. You know what I mean? Like, even, okay, let's look at the DeFi space. The DeFi space is worth $78 billion. So think about how young that is compared to the banking space, the traditional lending space that's in regular America, Bank of America's and all that. This has tremendous upside, man. It's going to continue to grow. And so even if it only doubles, which is like it could double with its eyes closed, right? We need to be getting in on this space right now. So the best way to do it, you go and put money into Coinbase, you go and buy you either Bitcoin or Ethereum, and then you create a diversified portfolio. You just try a couple of these out, read up on it. If it starts to tank, you go and sell it in the market and get something else. But I think for everybody, it's vital that we pay attention to this space over here. So real quick, I'm gonna take some questions. Anybody got any, like, what's on your mind? Because this is a lot. I feel like I just told you guys a lot, and really, I only gave you guys a slither, you know. But tell me what your thoughts are with crypto, and you know, do you guys see the technology? Because really, my whole goal was not to explain to you guys how much money you can make, right? You can make money in the stock market. You can make money in the bond market. You can make money anywhere right now, right? My goal was to show you guys that this technology will change the world that's in front of us in the very short term.
I definitely got a better understanding of some of the technology because I was wrapped around about what was really going on. Honestly, like I know it's money to be made, and I'm always involved wherever the dollar goes. So I'm involved, but how am I involved? Like, you know, I'm involved in ways I don't even know. Like,
I think the multipliers in this space, but again, you got to pay attention to it. It's not safe, but I think the multipliers in this space are insane. I mean, like IOTAs and Trons and Moneros. The Monero right now, you see why Monero's exploding? All these governments are attacking Monero right now. Well,
Monero's still real untraceable.
It's a privacy coin. So you guys know what a privacy coin is?
No.
Okay, so
Bitcoin to do hot shit with.
Right. There you go, Chuck. A Bitcoin is a public ledger. So literally every transaction on Bitcoin, if you go to the site and you go to the notes, you can see now you don't know whose name it is because it's the account and you don't know whose account is who unless you actually done business with them, but you can see every account, what they have in their wallet and every time they move it. So if let's just say hypothetically you're doing something hot, right? And the feds figure out which out of all these numbers are your account. Now they're not going to be able to get your money, but they can track every single account that you've done business with because it's a public ledger, right? What Monero is and all these privacy coins, these are privacy coins, right? And so they've taken the ledger part out and they've deleted it, where once you send money, nobody can see that transaction anymore. So there's
Hey, I don't mean to cut in. What up, Chuck?
What up, man?
What's going on? I didn't know who that was. Hey, what up, Chuck?
What up, Chuck?
Hey, I'm listening to y'all. I'm just listening to y'all.
No, it's cool, man. Like I said, you guys jump in because this stuff is important, man, because look at this. It's got a 90% up. It's done again in the last 14 days. It's up 50%. You would have put $100 in there, you're gonna have $150 in there today. If you put $100 in there 2 weeks ago, you got 150 today, right? And it's gonna continue to grow. It's all it does is grow.
Hey, Mike, I got a quick question for you.
Yeah.
Like, how do you know how like I know you can store your Bitcoin like on Exodus Wallet and stuff like that.
Yep.
But what's the best way to prevent like your Bitcoin from getting what do they call it? You know, when like they do like not like scam, but you know what I mean? Like when I can't explain it, but you know what I mean when they can take money out of your Bitcoin account without you. But you know what I'm trying to say.
So the only way they can do
hack your Bitcoin.
So it's just like when the people that call you and they're trying to ask you, like, you know how the people, if anybody has an old parent or old grandparent, you know this happens. They got hard lines, the house phone, right? And all day long, them house phones are ringing if you over 80, and they answer it every time because that's what they were taught to do. And it's somebody on the other side of the line scamming, and the way that they're scamming, the way that people really hack. See, people think that people hack by going into a computer and clicking in the dark web. Man, with all of the firewalls, blockades they got, that's extremely hard. I mean, it's damn near impossible, right? The way people hack now is they pull information from you by, like, I got a piece of mail. My daughter fell down the stairs a couple days ago, like maybe like a half ago, right? And so right after that, I get a letter in the mail and it says, oh, we see that you may need help on your medical bills. Just fill this out and we'll pay for it. The charitable cause. And I'm looking at it, this doesn't even look right. So I'm looking at it, it says, what's your name, your address, your telephone number, your job, your salary, your social security. And once you fill this out, mail it to us, we'll pay. Scam, right? So the way that people hack your wallets is usually they'll pretend to be a certain website, right? They'll pretend to be airdrops, and we can get into airdrops, right? Airdrops is probably the #1 place that people get hacked, right? They'll pretend to be an airdrop, and you go and put your wallet in. They say, oh, and also give us your public key, your private key, just so we can give it to you and make sure that it's really yours. That's a scam. You like never give your private key. You never give anybody your words, right? Your 26 words, right? But that's usually how they're getting hacked. Very rarely, when you see hacks coming, they're usually hacking the exchange, right? So they'll hack Binance Direct. They'll hack Coinbase Direct. Now, Coinbase has a lot of security because they have the most money out of all of them, right? Binance has a lot of money now too. The difference is Coinbase has kind of abided by the government, and the government's kind of stepped in for protection. And then they offer a lot of protection. They have a lot of resources to figure out who's hacking you, right? So that's why you haven't seen Coinbase really get hacked. But Binance has been hacked. I think the last hack they got Binance for was like 40 or 100 million was in 2019. I think it was $40 million. So essentially what happens there is for a split second, they freeze the exchange, right? So everybody has their wallets there. They are able to somehow access those live wallets because those are called hot wallets. Those are not cold wallets, right? A cold wallet is something that is not connected to the internet, right? Hot wallets connected to the internet. A hot wallet like that is connected to an exchange. So if you have your stuff on the computer, you're fine. The only time, I mean, Lord forbid somebody walk in, put a gun to your head, tell you to give them this stuff. That's how they're going to get you now. I mean, it's very hard for somebody to come in with a natural hack for your individual wallet because they don't know what you're holding in there, and they won't know what, like, again, you have your Exodus wallet can only hold certain coins, right? Or because it's only on certain platforms. You got to get multiple wallets. So now that if you want to really hold all of these coins on this list, you might have to have 40 different wallets. You know what I mean? So there's a Neo wallet, there was a Exodus wallet, there's an ERC20 wallet, there's a Bitcoin wallet, there's, you know,
so it's like using them as like different bank accounts, like different banks,
credit
almost.
cards is the way to think
Different.
about it.
Okay, that's not having all your coin or whatever you want to call it on
really. I
one
mean, like
exchange.
again, we all have them on our computer, or you have them on your phone now. So there's another thing called Maker, man. And that was that's the new wallet. So like even Exodus, I came to find out that people don't really use Exodus no more. You know, I'm new to the space. You know, they're using wallets that are incorporated into their browsers, and they're using browsers like Bravo browser. I don't know if you guys even heard of that. It's like it's integrated for crypto. So as you do your payments, and this is why PayPal had partnered with this. I think it's called Maker Wallet. I'm gonna pull it up really quick to see if I can. I think it's called Maker Wallet. If I'm not really Maker DOA. Why is every page this? Hold on. I think it's called Maker Wallet right here.
Bitcoin looks like it's about to break 50,000 right now again.
Yeah, it's gonna break 50.
Oh, I didn't even know you was. I forgot
that wall. It just broke it. It just broke 50,000. It's 2 minutes.
Done it like 5 times today.
So it's just really trying to get back to the wall, but Bitcoin is only up 2% for the day, but Ethereum's down for the day. So it's like I don't know.
Right, but again, you're looking at it from an investor standpoint. I'm saying I'm trying to get you guys to look at it from the technology usage standpoint. We really need to understand and learn this stuff because it's the future. Right. And if you can get on this space early, all the companies are going to move on this space, and then they're going to act like they're the experts. So why not be the expert? So imagine if we start our own coin, right? We call it the I don't know, the African American Expression coin, right? And you just create a coin, and anytime you go on Facebook and you like a post, you can get the ability to up that post with the African American Expression coin, right? And you can, and that's the way you pay the content creators, right? So instead of getting a like, they're actually getting money. So now they can be motivated off of money instead of just a blue thumbs up. Okay.
We tried to do that. 2018 is just hard. With the net, we were trying to do a net coin in Michigan for everybody that was net for Black-owned businesses to use the coin.
They just gave up. I mean, you're so early in the space. I mean, honestly, man. I mean, like
that happens to a lot of shit. You could be too early for shit.
I think honestly, guys, between me and you and the lamppost, I think on probably about 98% of these things are just either too early or the component that they need to run is just not there right now. Decred is another fantastic opportunity right here. Decentralized credit. I mean, there's just so many different plays, guys. And I will tell you, because there's no way for me to learn all of them. I know Waves is a good one right here, but they all do something. So one thing, if you, and I know, I want to just make sure that you guys are aware of how to find information. So once you click in here, the beauty of these pages outside the charts, and if you're just trying to invest for investing standpoint, it's cool, but where most people fall, and I tell you because I'm a part of it. I'll show you on my phone, right? And I'm a part of these groups, and they're pump groups. So what they do is they create they tweet you every couple of minutes. Let me see if it's on my Telegram. Okay, they tweet you every couple of minutes, right? And you guys can't see that, but they'll say, dear members, 7 hours 25 minutes left into the pump. With all social medias combined, Big Pump Signal has over 40. So they're just talking about this. It's called Big Pump Signal, right? And what they're doing is they say at 9 p.m. we're going to tell you what coin to buy, right? And they say 4 hours left. And then when the time gets there, they tell you go on Binance, buy this coin. And what you got to do now is once you buy it, they say for the next 30 minutes, everybody go on Twitter, everybody go on Facebook, everybody go on YouTube, make videos, and we're going to pump this thing up. And then once it hits your level, you got to know when to get out. So if let's say you got in at 1 cent, and hey, I only want to make 200%. So you get out at 3 cents, right? But it might ride up to 7%, but you want to get out before it starts to fall back real quick, before everybody on the team pulls out. But they go and pump stuff up. So the danger in crypto is that if you get your information from Twitter, if you get your information from YouTube, 9 times out of 10, that's somebody being paid or manipulating the market to make it pump up like that. Okay. So the way that you do your own research is by, again, you can look at the charts, look at the you know what I mean? So you can see where the average play of it is at. You can see its tendencies. It goes up 10% and it falls back, right? You can you can look at the developers. Now this gets a little bit more complex, is to see how many devs. Now they don't really have a lot of protocols in here, but they got these different groups. So what I do right here is I go on their website. So first thing first, I go and look at the website. How clean does the website look? Does it look like they put money into this project? Because some of them, you'll go on the website and it looks like I did it on Wix, right? And so if that's the case, if you guys can't make a quality website, then you're probably not developing a quality protocol or quality app. And you click through all the links. If they got videos, you watch the videos, you pay attention, because some of these sites will look good, but they're garbage, right? And then you want to look at the team. So another thing was, when I go onto this site, I'll go and find, usually they'll say like our team. I don't know what gravity, I don't know what all this stuff means up here. Some of them will get a different. So you find the team, right? And let me see if it's still up here. But they'll show they're talking about smart contracts. They don't really have their team up there. But if sometimes they'll have like the people that are behind it. You can go and pull up their LinkedIn pages, right? See how long they've been on, what other projects are they working on. So sometimes if there's some real heavy hitters on there and you click it, and then if that site is nowhere on their LinkedIn page, then it's probably they're just paying that person to be on there, right? And then you can even go, and this is getting nerdy guys, but this is how, I mean, really in this space, because there's so much scammers out here, you got to do this kind of stuff. But you can go and you can go pull the dev notes, right? So, okay, Telegram, what we use, this GitHub right here, right? The GitHub is the notes, the developer notes. So you can actually go in here and see when's the last time they were actually working on the project. Who's all working on the project? So this one got 27 developers working on it. I can click through and it shows you. So it shows you he did Waves and he did it. It shows you what actually he did. So the last time Waves platform was touched was 3 hours ago. And then this guy came in and he said he did go implement. He made implementations of the nodes, which are the communicating pieces. And he did that 6 hours ago. So, okay, Waves is actually pretty legit. They got people working on it. They got a team. They got discussion. It's a project that I believe that they probably are not just creating this to be a pump, right? So, okay, that might be something as long as I like the project they're working on, right? So I go and find out what project it is they're working on. So maybe they're doing making underwater sound systems to talk to whales in South Africa, you know what I mean? So they can fish better, whatever the platform is. Then I can say, okay, I want to go and invest in that. And then I can go buy the coin. When you buy the coin, you're essentially investing in the product. Okay. So you go down this list and figure it out. And so you use the filters up here as well. So you would go up here and you can explore all coins. So remember, everything's not a coin. Some things are protocols, some things are coins, some things are tokens. You can go, if you like decentralized financing, which is probably the hottest thing in cryptocurrency right now, you can click the DeFi. You can see the exchanges. Let's see, you can, you just have to use the filters. That's what I would just tell you guys, use the filters. So hashing algorithms, you just got a lot of them. So remember I was talking about, you guys heard me talking about ERC20, that's a hash algorithm. That's essentially what a hash algorithm is. When it's mined, what are you mining? Okay, that's what that is. This is what this is talking about. So if you ever set up a miner, you have to input your hash algorithm. Now that gets real nerdy for you guys. I'm not really trying to you don't really need to know that, okay? But you do, what I really want you to take away from that is CoinGecko, okay? Write that down. And then CoinMarketCap. They're both useful in different ways because they both have different information, okay? So if I go to CoinMarketCap and I click Stellar Luminous, right? I can go and see everything. I can see the community. I can go see their org. I can see different blogs. I can see what people are saying about them on Twitter, on the Twitter space, right? I can go to their Twitter page. I can see their ats and their mentions. So you just have to do a little bit more due diligence, because like with stocks, all we have to do is go to, and I don't know if anybody, I know me, Chuck, and Byron pay for one, but we go through Yahoo, right? And we bought the premium, so you can go through here and pull your dashboards. You know what I mean? You just don't have this kind of information and I don't know if you guys can even see my screen. I just thought about that. Whenever I switch to different screens, I don't know if you can see it.
You can see it.
Okay, because I was on Yahoo this time. So as you switch to different ones, like you see Yahoo, all the work's being done for us. So they're telling us on Yahoo, CME is going to be bullish, and it's going to, you're looking to get something that's going to give you 8% growth in the contract. They're showing you the chart, what to expect, what dollar. So right now it's 189. Your long-term shot should be 200. It's going to tell you all. You don't really have anything of this level on in the crypto world. So you got to do your research yourself. Okay. So with that said, any other questions? I just want to make sure you guys got a starting point. Big thing I want to make sure is that Bitcoin, for those that know, you know, those that don't know, Bitcoin, what's today's date? February 16th. Bitcoin will be at $70,000 by March 1st. Okay. $70,000. It's once it gets to 62. So there are a lot of work that has been done in reading charts of Bitcoin, right? That's how we knew when it was down at $30,000. I told you guys, I said, the wall is at 38, right? And I don't know if you guys remember me telling you guys, I said, if it can get past the wall at 38, it's going to hit 42. And if it gets past 42, it's got a clear path to 50. If it can break the 50.1, so 50,000.1, which is the current wall that it's trying to fight through right now, it's got a clear path to 62.5. Okay. Then from 62.5, it's 100,000, but it's going to walk up to 100,000. It's going to be a slow, steady incline. It's not going to be one of those pops up. Okay. So if you're in it right now, excellent. You killed it. Hold it. If you're not in it, you are absolutely not too late. Okay. Now, what you may experience is you buy it, let's say today, tomorrow, let's say you buy it at 55,000. You got lucky enough to catch it at 55 before it hits 62. Then all of a sudden, Mike's wrong. Hit 55, hits the wall, drops down to 45. Do not panic. Do not sell, right? You close your eyes and you look at Bitcoin again in 5 years. Look at Bitcoin again in the summer of 2023, right? But don't plan to sell that to 2026. Okay, that's the mindset you have to have with Bitcoin. You will do yourself justice. If you look at it every day and you go and try to take your natural investment and you try to flip your natural investment, meaning you go and try to trade all these different altcoins, you will be out of Bitcoin by the next big crash. The next big wave is going to happen this year. Correction. You won't be playing in it. You're going to miss the next big wave up. I'm trying to tell you guys, even more than I tell you with stocks, get into Bitcoin. Buy you a little Bitcoin, a little Ether. I don't give a damn if it's $100 bucks, right? You get $100 worth of Bitcoin, sit that in there. Guess what? That is going to be $400 2023. Could be $400 sooner. Now, if it does jump up to $400 in the short run, it's not going to stay there, okay? It's going to fall back and it's going to do its dance. But it's one of the best underlying stores of value that you can have, okay? I just tried to tell you guys that. I hope I didn't lead you guys astray. The last one, I think I was right when I said get in on Bitcoin because of all of the chaos. That was retailers. That was Robinhooders because of GameStop moving in on Bitcoin. Now what you're having is the perfect storm happened for us. Our homeboy Elon Musk went and dropped his nuts on the table and he put $1.5 billion worth of their capital, their cash, into Bitcoin. It's already paid him back. I mean, because he probably bought that at 30,000. He's already up on that 1.5 billion, right? But what does that do to Apple, to Wells Fargo, to Citibank, to anybody that sells anything, any goods internationally, right? They're selling goods internationally. They're going to want to have crypto. So I just want to leave you guys with that. Any other issues, questions, comments, anything you guys want to bring up real quick?
Good shit.
Good deal. So yeah,
good look, bro.
Yeah, you got any questions? Just call me, text me, hit it in the group, and we there. But all right, y'all. I appreciate everything. I appreciate everybody hopping on. All right.
Please, take it easy, everybody.
All right, later.
All right, later.
Y'all be cool, man. All right, Norm, cool.
Appreciate you.
Yeah, no problem. Anytime, for sure.
Mommy.